With the approach of January, certain food products are likely to rise in price due to economic factors, climate events, and market disruptions. Let's take a closer look at 8 products that are likely to face rising prices and the reasons for this. The
Fresh
first
bread.
product is bread
Get your
and
fresh
wheat-based
bread here.
goods.
The
The wheat
best
market
in
is
town.
undergoing significant changes as January 2025 approaches, directly affecting bread prices and other wheat products. World wheat production shows high levels, with the FAO estimating a record volume of 784 million tons. However, this increase in production occurs against the backdrop of tightening global supply due to rising consumption demand. For example,
Blight has
the
taken hold of the
International
lower
Grains
fields.
Council reports a
We'll lose
narrowing
the
gap
whole
between
crop if we
production
don't
and
act now.
consumption, which may lead to shortages in high-demand regions. In the United States, wheat futures have recently stabilized around $5.32 per bushel, reflecting ongoing market corrections caused by both domestic and international factors. Wheat production in the European Union, a significant contributor to global supplies, is expected to be 9% lower than last year, mainly due to adverse weather conditions. This led to a reduction in the forecast by 122,600,000 tons for this year. Such regional deficiencies create waves in the broader global market. Simultaneously, rising costs for raw materials, including fertilizers and energy resources, further complicate the situation in the wheat production industry. These additional costs are passed on to consumers in the form of rising prices for wheat products such as bread and pasta. Changes in the policies of key wheat-consuming countries also affect the market. Egypt, one of the largest wheat-importing countries, increased the price of subsidized bread by 300% to cope with economic problems and rising subsidy costs. Such measures indicate that the availability of bread is becoming a pressing issue in both developed and developing countries. According to forecasts from the U.S. Department of Agriculture, food prices are expected to rise by 1.6% in the year 2025, including staple foods like bread. This, combined with geopolitical uncertainty and fluctuating trade conditions, suggests that pressure on prices will persist, making wheat products increasingly valuable. The second product is coffee. The global coffee market is experiencing significant volatility, leading to a noticeable increase in prices for consumers. Arabica futures have risen to about $323 per pound, levels not seen since 1977. This jump is primarily caused by a severe drought in Brazil, the largest coffee producer in the world, which has negatively affected the harvests. Similarly, the prices of Robusta also increased, with futures reaching $5,829 per metric ton in the middle of the year, driven by unfavorable weather conditions in Vietnam and Indonesia, key producing countries of Robusta. The El Niño weather pattern exacerbated these supply constraints, leading to poor harvests and contributing to a 3-year global supply shortage. European importers are accelerating purchases to comply with upcoming European Union rules against deforestation, which require proof that imported coffee is not linked to activities leading to forest destruction. This regulatory pressure further tightens supply chains and raises prices in the United States. Consumers feel the impact of these global trends. The U.S. Department of Agriculture forecasts a 1.6% increase in food prices next year, which includes coffee. Cafes and retailers are adjusting their pricing strategies to reflect increased procurement costs, leading to noticeable price hikes on popular beverages. Looking to the future, analysts predict that while coffee prices may slightly decrease with new market supplies, they will remain historically high due to ongoing disruptions in the supply chain and regulatory changes. Consumers should expect further price volatility in coffee, which will depend on climate events, geopolitical factors, and changing market dynamics. Next on the list is orange juice. The orange juice market is facing serious problems due to multiple factors pushing prices to record levels. Brazil, the world's largest producer of orange juice, is experiencing its smallest harvest in 35 years, with production down 25%. A severe drought, the worst in 50 years, has devastated the crop. Furthermore, a citrus disease known as citrus greening has significantly affected 38% of orange trees in Brazil, further reducing production volumes. In Florida, once the second largest orange production region in the world, production has decreased by 92% over the last 20 years. Natural disasters, especially Hurricane Milton, caused enormous damage to crops in key citrus regions just before harvest season, exacerbating supply shortages. Wholesale prices for orange juice soared to $6,500 per ton, more than doubling compared to the previous year when the price was $3,000. Retail prices reflect this trend, and some brands have increased costs by more than 34%. Major producers like Tropicana warn of profit cuts, shifting the burden onto consumers. Some producers are considering alternative solutions, such as adding tangerines to their products, but these measures do not resolve the widespread shortage. Countries like Australia, heavily reliant on Brazilian orange juice concentrate, expect a price increase of at least 20%, leading to a shift towards drinks with lower fruit content. Consumer demand for orange juice is expected to decrease by 15 to 25%, as rising prices drive people to seek cheaper alternatives. The ongoing problem with citrus disease and unfavorable weather conditions indicate that the recovery of orange juice production may take years. Industry experts predict that these issues will keep prices high in the foreseeable future, leaving consumers little hope for relief. The next product is sugar. The global sugar market is currently facing serious challenges, leading to rising prices and supply restrictions worldwide. India, the second largest sugar producer in the world, reported a 35% decrease in sugar production in recent months. This reduction is related to delays in harvest and adverse weather conditions in key regions such as Maharashtra and Karnataka. As a result, India is likely unable to allocate export quotas this season, further reducing global sugar stocks. This step has already begun to influence international markets, as India plays an important role in stabilizing sugar exports. Cuba's sugar industry, once a leader in the global market, is now in crisis, suffering from a lack of resources for fuel, fertilizers, and machinery. Sugar production in the country has reached a record low, and the number of operating factories continues to decline, further complicating product output. This created a significant disruption in the global sugar supply chain, increasing pressure on other producing countries to compensate for the shortage. Brazil, the largest sugar exporter, was also heavily affected. A widespread drought and devastating fires disrupted the harvest in the central southern region, leading to lower than expected yields. As a result of the sugar shortage, prices reached new records, with futures trading above $22 per pound, a level not seen for several years. Meanwhile, global consumption continues to rise. Growing demand, especially in developing countries, exceeds production volumes, creating a deficit of more than 3 million metric tons in the current season. This imbalance is particularly noticeable in the United States, where domestic sugar stocks are rapidly declining. The U.S. Department of Agriculture has revised the stock-to-use ratio, indicating stricter supply conditions and the likelihood of further price increases. Retailers and manufacturers began adjusting prices, which is expected to affect both raw sugar and sugar-containing products. Unfavorable weather conditions, including droughts and extreme heat, are expected soon, exacerbating production issues in major sugar-producing regions. The impact of these challenges will be long-lasting as sugar crops recover from such damage over several years. Combined with growing global demand, regulatory changes, and economic pressures, the market is expected to remain unstable. Consumers should prepare for a constant rise in sugar prices and products based on it as the world faces these unprecedented challenges. Plant oils rank fifth. The global market for vegetable oils is undergoing significant changes due to various economic and agricultural factors. In the United States, farmers express concern about the influx of imported used oil, especially from China. This growth undermines domestic investments in crops intended for low-carbon fuel production, as indicated in recent climate legislation. The abundance of cheaper imported oils has led to a noticeable drop in soybean oil prices, prompting agricultural groups to advocate for policy adjustments in favor of American crops. In India, farmers are changing their planting strategies in response to rising temperatures. Against the backdrop of favorable market prices, there is a noticeable shift from growing rapeseed and mustard to crops like wheat and potatoes, which are less sensitive to heat. It is expected that this change will lead to a reduction in areas allocated for rapeseed by about 10% compared to last year, potentially increasing India's dependence on imported vegetable oils such as palm, soybean, and sunflower to meet domestic demand. The European Union forecasts a significant increase in olive oil production in the 2024-2025 season, mainly due to Spain's recovery from previous droughts. Production is expected to reach 2 million metric tons, which is 31% higher than the previous season and 9% above the average of the last 5 years. This growth is due to favorable spring rains that increase yields. However, It remains unclear whether consumers who previously switched to more affordable alternatives, such as sunflower oil due to high olive oil prices, will return to olive oil. Consumption in the EU is expected to grow by 7% after a 22% decline over the past 2 years, while prices are also expected to decrease. In the United States, olive oil prices have reached unprecedented levels, with some bottles selling for up to $12.39. However, producers like Dulo, known brands like Berry and Carbonell, expect prices to drop by 50% as European harvests recover from previous climate issues. It is expected that this price adjustment will occur between November and January, provided there are stable weather conditions and successful harvests. The vegetable oil market is also witnessing innovations in sustainable alternatives. Famous chefs promote oils derived from microalgae and fermentation processes, offering versatility, a neutral taste, and environmental benefits as they require fewer resources than traditional oils. Iconic establishments like 11 Madison Park and Blue Hill at Stone Barns have begun to use these sustainable oils in their culinary practices, despite their currently higher prices and scaling difficulties. Nevertheless, ongoing research and positive feedback suggest a promising future for these alternatives in everyday cooking. In India, Potential Foods reported a 21% increase in profits for the second quarter, reaching approximately $37 million, driven by strong demand in the plant oil segment. The flagship product of the company, Ruchi Gold Oil, significantly contributed to this growth, with the edible oil segment demonstrating a revenue increase of about 10%. This dynamic highlights the steady demand for edible oils in India, despite high import duties, with sales in rural areas outpacing urban ones. As for dairy products, the U.S. dairy industry is facing a complex situation characterized by fluctuating production levels, changing consumer preferences, and significant economic changes. In July 2024, the average price of dairy cows rose to approximately $2,500 per head, compared to around $1,900 in July 2023, indicating increased demand or other economic factors affecting dairy cattle prices. The number of dairy cows decreased by 40,000 heads in August 2024 compared to the same month in 2023, reflecting the ongoing consolidation in the industry. The forecast for milk production in 2024 is 226 billion pounds, which is a slight increase compared to previous forecasts. However, the projected price for all milk in the year 2024 has been lowered to $22.75 per 100 pounds, indicating that an increase in production volumes may not lead to greater profitability for dairy farmers. This change is due to various factors, including stock levels and recent price fluctuations. The cheese market shows significant growth, with forecasts increasing by $38 billion from 2024 to 2028. This expansion is due to the growing popularity of cheese in various cuisines and the integration of artificial intelligence into market development. Despite this positive forecast, the milk market in the USA is facing problems in international trade, especially regarding demand for imports from China and the results of the upcoming corn and soybean harvests. Butter prices reached record levels, creating difficulties for both bakers and consumers. In Europe, butter prices amounted to $8,876 per metric ton, which is 83% higher compared to the previous year. This increase is related to high demand, limited supplies, and dairy producers' priority on cheese production. The U.S. is also seeing a rise in butter prices, with forecasts of high prices continuing until 2025. Analysts suggest that oil prices will eventually decrease with increased production volumes, but a significant drop may take several months. The expiration of the U.S. farm law on September 30, 2024, has led to uncertainty in the dairy sector. This gap creates risks for various agricultural programs, which may lead to a sharp rise in dairy prices in the year 2025. Consumers may face rising food prices and reduced access to vital nutrition programs, highlighting the need for timely legislative action to support the industry. Environmental issues also affect the dairy industry. Methane emissions from agriculture, particularly from livestock, account for 40% of global methane emissions. This has led to calls for the development of comprehensive strategies, including improved herd management and selective breeding to achieve climate goals. Companies like Danone have committed to significantly reducing emissions, while others are criticized for lacking specific goals. In response to changing consumer preferences, companies like Starbucks have eliminated extra charges for plant-based milk in their stores in the USA and Canada. This decision aims to promote sustainable food choices and may set a precedent for other food producers, potentially normalizing plant-based options and fostering more sustainable consumption patterns. The dairy market in the USA is projected to grow from $17.8 billion in 2024 to $126.8 billion by 2029, with a compound annual growth rate of 3.44%. This growth is driven by high demand for dairy products in both domestic and international markets. However, the industry must overcome challenges such as price fluctuations in milk, environmental issues, and changing consumer preferences to sustain this growth. Canned goods occupy the seventh place. The global canned food market shows steady growth as consumer demand for convenient and long-lasting products continues to rise. Market analysts predict that by 2029, the value of this industry will exceed $19 billion, with an annual growth rate of more than 4%. This growth is linked to urbanization, changes in dietary habits, and improvements in preservation technologies that enhance the quality and variety of canned goods available to consumers. Canned fruits and vegetables remain a staple in homes, providing year-round access to fresh produce regardless of the season. The demand for canned protein sources, such as fish and meat, has also increased due to their long shelf life and convenience in cooking. Ready-to-eat canned dishes are especially popular among busy city dwellers, further expanding the market. Online stores have increased consumer access to a variety of canned products, contributing to this positive trend. However, disruptions in the supply chain create certain difficulties. Labor shortages, fluctuations in consumer demand, and logistical delays have affected the availability and prices of canned goods internationally. In some regions, bottlenecks in the supply chain have caused shortages of key materials, including aluminum for cans, leading to increased production costs and retail prices. Competition from imports negatively affects local canning companies in several countries, where local farmers face reduced orders for fruits and vegetables as canning companies prefer cheaper imported products. This raises concerns about the viability of local agriculture, and the demands for government support for domestic production are becoming increasingly relevant. In addition to food products, innovations are changing the landscape of canned goods. Companies are starting to produce canned drinks, including ready-made cocktails, in response to the growing consumer interest in convenience and novelty. This expansion into unconventional categories is expected to further diversify the market. Canned goods producers are also investing in sustainable packaging solutions to meet environmental standards and consumer expectations for eco-friendly products. Despite current challenges, the canned goods market is poised for further growth, where innovation and adaptability play a key role in overcoming supply chain issues and meeting changing consumer needs. Considering that life is becoming increasingly busy, the demand for convenient and reliable food products ensures that canned goods will remain an important element of global food systems. Rice ranks 8th. The global rice market is the foundation of food security, with forecasts indicating a market size of approximately $37.5 billion in 2024, expected to grow to $43.5 billion, corresponding to an annual growth rate of 3%. Rice is grown in more than 120 countries, with China and India together accounting for about 50% of global rice production. In the year 2023, the total rice production in the world was estimated at 52,900,000 metric tons, which was a slight increase compared to previous years. China became the leader in production with approximately 20,400,000 tons, followed by India with about 17,100,000 tons. Other significant producers include Indonesia, Bangladesh, Vietnam, and Thailand. Despite high production levels, some regions face challenges in meeting domestic demand, leading to significant imports, especially in sub-Saharan African countries. International rice trade is influenced by various factors, including domestic policies and global demand. India, the largest rice exporter in the world, has taken measures such as lifting the minimum export price on non-basmati white rice to support farmers and enhance competitiveness in the global market. In turn, countries like Indonesia are expanding agricultural land by 3 million hectares, striving for food self-sufficiency and reducing dependence on imports. Technological advancements and sustainable agricultural practices are crucial for improving rice production efficiency. The introduction of innovations such as drought-resistant rice varieties and precision agriculture technologies helps tackle issues like water scarcity and climate change. These developments play a crucial role in maintaining productivity and ensuring the sustainability of rice cultivation systems. Consumer preferences are also changing. There is a growing demand for various types of rice, including aromatic and specialty varieties. This shift encourages producers to diversify their offerings to meet changing tastes and dietary requirements. Moreover, there is a trend towards increasing interest in organic and environmentally friendly rice, reflecting a broader consumer awareness of the ecological and health aspects of production.